Hello and welcome back to our channel. Today, we will be talking about the benefits of having credit. Credit is an essential part of our financial lives, and it is essential to understand its benefits and how it can help you achieve your financial goals. Whether you are looking to buy a house, a car, or just want to improve your credit score, credit can help you get there. In this video, we will cover the following topics. 1. What is credit? 2. Why is credit important? 3. The benefits of having good credit. 4. How to build and maintain good credit. 5. Tips for using credit responsibly. So, let's get started. Part 1. What is credit? Credit is a financial tool that allows you to borrow money from a lender with the understanding that you will pay it back, usually with interest. There are many different types of credit, including credit cards, personal loans, auto loans, and mortgages. When you apply for credit, the lender will review your credit history and credit score to determine your creditworthiness. Your credit history is a record of your past credit transactions, including how much you borrowed, how much you paid back, and whether you paid on time. Your credit score is a number that represents your creditworthiness based on your credit history. Part 2. Why is credit important? Credit is important for many reasons. First, it allows you to make large purchases that you might not be able to afford otherwise. For example, if you want to buy a house, you will likely need a mortgage, which is a type of credit. Credit is also important for building your credit history and credit score. Your credit history and credit score are used by lenders, landlords, and even some employers to determine your creditworthiness. If you have a good credit history and credit score, you are more likely to be approved for loans, rental applications, and job applications. Finally, credit can be an important tool for managing your finances. For example, if you use a credit card responsibly, you can earn rewards points or cash back, which can help you save money on everyday expenses. Part 3. The benefits of having good credit. Now that we have talked about what credit is and why it is important, let's discuss the benefits of having good credit. 1. Lower interest rates. One of the most significant benefits of having good credit is that you can qualify for lower interest rates on loans and credit cards. When you have good credit, lenders see you as a low-risk borrower, and they are more likely to offer you favorable terms and lower interest rates. 2. Easier loan approval. Having good credit can also make it easier to get approved for loans. When you apply for a loan, the lender will review your credit history and credit score to determine your creditworthiness. If you have a good credit history and credit score, you are more likely to be approved for the loan. 3. Better credit card rewards. Many credit cards offer rewards programs that allow you to earn points, miles, or cash back on your purchases. When you have good credit, you are more likely to qualify for credit cards with better rewards programs. 4. Better insurance rates. Believe it or not, your credit history can affect your insurance rates. Insurance companies use your credit history to determine your risk level, and people with good credit are considered lower risk. This means that if you have good credit, you are more likely to qualify for lower insurance rates. 5. Easier rental approval. Landlords also review your credit history and credit score when you apply to rent an apartment or house. If you have good credit, you are more likely to be approved for the rental and may be able to negotiate better rental terms, such as a lower security deposit or lower monthly rent. 6. Higher credit limits. When you have good credit, credit card companies and other lenders are more likely to offer you higher credit limits. This means that you can borrow more money if you need it, which can be helpful in emergencies or for making large purchases. 7. Better job opportunities. Believe it or not, your credit history can even affect your job opportunities. Some employers review your credit history as part of the hiring process to determine your level of financial responsibility. If you have a good credit history and credit score, you may be more likely to be hired for certain jobs. Part 4. How to build and maintain good credit. Now that we have discussed the benefits of having good credit, let's talk about how to build and maintain good credit. 1. Pay your bills on time. The most important thing you can do to build and maintain good credit is to pay your bills on time. Late payments can have a negative impact on your credit score and can make it harder to get approved for loans and credit cards in the future. 2. Keep your credit utilization low. Credit utilization refers to how much of your available credit you are using. It is important to keep your credit utilization low, ideally below 30% of your available credit. This shows lenders that you are using credit responsibly and can help improve your credit score. 3. Monitor your credit report. It is important to regularly check your credit report for errors or inaccuracies. You can get a free copy of your credit report once a year from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion. If you find any errors, be sure to dispute them with the credit bureau. 4. Use credit responsibly. Using credit responsibly means only borrowing what you can afford to pay back and making your payments on time. It is also important to avoid opening too many new credit accounts at once, as this can be a red flag to lenders. Part 5. Tips for using credit responsibly. Finally, let's talk about some tips for using credit responsibly. 1. Set a budget. Setting a budget can help you keep track of your expenses and avoid overspending. Make sure to include your credit card payments in your budget and try to pay more than the minimum payment each month to avoid interest charges. 2. Pay attention to due dates. Late payments can have a negative impact on your credit score, so it is important to pay attention to your due dates and make your payments on time. 3. Avoid maxing out your credit cards. Maxing out your credit cards can hurt your credit score and make it harder to get approved for loans and credit cards in the future. Try to keep your credit utilization below 30% of your available credit. 4. Don't close unused credit cards. Closing unused credit cards can actually hurt your credit score, as it can decrease your available credit and increase your credit utilization. Instead, consider using your unused credit cards for small purchases and paying them off in full each month. Conclusion. In conclusion, having good credit can provide many benefits, including lower interest rates, easier loan approval, and better credit card rewards. To build and maintain good credit, it is important to pay your bills on time, keep your credit utilization low, and use credit responsibly. By following these tips, you can take control of your finances and achieve your financial goals. Thank you for watching, and we'll see you in the next video.